Hey, this is Devin over at Valor Insurance. We're here with Brian here with West Michigan Mortgage. Thanks for coming on, Brian.
Appreciate you having me.
Yeah, man. So what got you into the business?
I started in 2018, March of 2018. I was a supervisor at a factory. So I know it sounds like a pretty big jump, right? But big swing. So the owner of my company now, he's been doing this for about 18 years. And he's also happens to be my brother.
Yeah.
So, in 2018, I was sick of, doing what I was doing. He had a spot open for me, said, come on over. He thought I'd be a good fit. I ran for it, and I haven't looked back.
Can't go wrong with that. No, actually, I started off in the factory setting too, so I definitely
Right.
get that. It's not for everybody, that's for sure. But no, that's awesome. So I guess tell me a little bit about like your guys' company. Like, what do you guys do? Like, how do you guys run things?
So at West Michigan Mortgage, our main focus is the client 100% of the time. We bleed urgency. So our average clear to close time, so from the start to the finish, is less than 18 days.
Oh wow.
Most places are, talk about being at 30 days. Some places are at 45 days.
I do hear the 30 a lot. That's
yeah.
for sure.
We actually, our goal is to get it under 15 so that we can promote that we will get your loan done in 2 weeks.
Okay. Yeah.
We're getting really, really close. There's always these one-offs that might take a little bit longer that are pushing our average a little bit higher, but we're trying to, really make sure that we're cutting that down. So we are 100% client focused and we bleed urgency. Those are our main points.
Okay. Yeah. Do you guys do a lot of education when you're kind of going with your clients, or is it just kind of?
100%. So we want to make sure that our clients are the most informed clients out there. We walk them through every step of the process. As we go through it, we give them not just them, but their agents as well. So we give them updates throughout the entire process, start to finish, so that they know exactly where they're at.
That's pretty awesome.
Yes, and we flex our time, so it's not like they can't get a hold of us after 5. So we encourage phone calls, we encourage communication.
That's pretty awesome. I mean, that's kind of the same thing we kind of do here, and that's kind of why we're doing the YouTube videos and all that stuff and kind of put out the information, because client education is extremely important, because sometimes it's like you want to understand what they're getting, what they're buying, the process. You want to understand all of that, just because nobody teaches either one of our industries. You know what I mean? So it's kind of one of those things. Somebody's got to teach them. Somebody's got to help the clients understand.
My personal philosophy is the more informed a client is, the happier they'll be with the outcome. Right? So if they know step by step what's going on, even if a problem arises and they know about it, then they're going to be happy at the end.
Oh yeah.
Right? And that's 100% our business, is to make them happy, to make them understand what they're getting, so that they're not disillusioned at the end, right? And when they're signing those documents, they're signing with confidence.
No, I agree, and it's kind of not to really put them down, but sometimes those bigger companies, like your direct companies or like on my side of the insurance and some of the bigger companies there, it's all about those numbers, just processing people, getting them through.
Yes.
Which doesn't always help the clients. Sometimes you just got to take a step back. Okay, hey, look, what does this really mean? What am I really getting into? Kind of letting them understand, like, hey, look, this isn't, you're just not signing your life away. Like, you're actually getting what you want, and like, this is how it's actually
Right.
going.
Yeah, 100%. A lot of times when you deal with like a big bank or a big company, in general, you feel like a number.
Exactly.
Right? There's no
Yeah.
personalization to it. A lot of times when you call, you get a different person every time. Things like that. Those are things that we, wanted to cut in our business model completely. We're not doing that. You deal with this set of people every
Yep.
single time you call. You get the same people. If one of my processors is working on your deal, it's going to be the same processor every single time.
Yeah.
You're going to be able to call her directly or him directly and have a conversation with that person. So.
No, that's awesome. No, that's pretty important. So kind of get into like how kind of mortgages and insurance relate a little bit. So like, I mean, most people may know, but some of the people out there may not. Why is it important to get a good homeowner's insurance policy when you're doing a mortgage?
So for me, and for most people, a home is the largest investment you're going to make in your entire life.
True.
Right? You're going to want to protect that asset. It's one of the only assets that you're going to buy that appreciates, right? It appreciates pretty steadily,
Especially lately.
right? Well, lately it's been appreciating at like 20% a year, and in all honesty, it goes from like 3 to 7% on average.
Oh, okay.
That's a really great asset to have, but if you don't have it protected correctly, it can be disastrous.
Yeah.
Right? So it really does matter who you use and how you protect that asset, because that's exactly what it is. Obviously, it has all of your worldly possessions in it, but
Yeah.
it's also, your biggest, like I said, it's your biggest asset, and you have to protect it. So it really does matter who you use and how you protect it.
So the other question with that is, so how does home insurance actually affect your mortgage? Like when you're getting a mortgage or you're doing a refi or any of that. So how does home insurance really affect that?
So, I mean, I guess it affects a couple different ways, right? So you have a yearly premium that gets broken down into a monthly payment, and that monthly payment can affect your DTI, or debt to income ratio.
Okay.
So we need to make sure that you're getting a policy that not only protects that asset, but also comes in that you can afford it.
Yeah.
Right? So on paper, you need to be able to afford this, along with your, taxes and your principal and interest payment. So, I mean, it definitely can cause a deal to go one way or the other if it's close on your debt to income.
So how come some things affect your debt to income? Like, so your auto insurance, I'm told that doesn't affect your debt to income, but your homeowner's insurance and there's other bills. Like, how come some affect it and some don't?
So there are things that are quote unquote necessities, right?
Okay.
So you don't have to have a car to live. I mean, you do, but you don't, right?
Depends on where you live. But yeah.
Right. So these things are things in the mortgage process that affect that liability, right? That house on your credit report is a liability. Those are the things that the mortgage company is going to look at to protect their investment as well.
Okay.
Right. So they want to make sure that you qualify to pay them back.
True.
So.
No, that makes sense. No, I totally get it. So I know you're kind of talking about how you broke up into monthly, and then so when you most of the time at closing, if I understand correctly, your closing, however that works, will pay your home insurance.
Yeah. So if you escrow
or whatever.
yeah.
So how does escrow really work? Because I know a lot of people don't really understand that.
So the easiest way to break that down would be an escrow account is essentially a savings account, right? That the lender holds for you. And then they pay out your taxes and insurance for you, so that you don't have to worry about making these large one lump sum payments once a year. Let's say you live in, like I live in Rockford, where taxes are pretty high. If you have a $200,000 house there, your taxes are going to be like $3,800 a year.
Yeah.
And do you really want to be on the hook in August to write a $3,800 check? Are you going to, budget and plan? Most people won't. It's hard. So they set that up so that you don't have to worry about it.
Okay.
Because you can have a lien against your property for unpaid taxes.
True.
And they want to make sure that they're the only lien holder.
Okay. Yeah. No. I mean, that makes total sense on that. So I know. So your home insurance and stuff is kind of wrapped up into that. So let's just say, for example, like a client wanted to switch his home insurance, and they came to me, I want to switch their home insurance. How does that really affect their escrow and payments? Because I know some people are a little bit nervous, like, oh, you know what, it's wrapped in my mortgage, I don't want to touch it. So how does that really affect them?
So I mean, it's a pretty easy process, and you know this just like anybody else. When you switch, anything that has been prepaid is going to get sent back to you.
Yep.
And then your current insurance is going to contact your lender. Yep. So that your lender can pay them out their year. Right? Okay. It's a super easy process. There's almost zero issue with the client having to do anything. It's your job to contact that lender and say, hey, I need the mortgagee clause, I need these things, and then they're going to start paying you.
Okay. Right? Is it usually best to kind of return that money back into your mortgage or escrow once they get that refund, so it doesn't Yes. I mean, you can't. I'm understanding. So you just will have like a negative escrow, so you just have to pay more. Basically.
Right. So anytime you have a negative escrow, what they're going to do is they're going to send you a letter to augment your payment to cover the difference. So they'll still pay out whatever you owe.
Yeah. And
then you have to pay them back. So that'll change your monthly payment. So it's better to just take that overage and put it right back into your escrow account.
Okay. Is that something you would contact your mortgage person about that you work with, or is it usually like a service center? Okay.
Yep. Either the mortgage person that set you up or the servicing department of your lender. Yeah.
Okay. So I do get this question a lot sometimes. Is if I got my homeowner's insurance that's kind of protect my house, kind of what's the whole point of mortgage insurance?
Mortgage insurance protects the lender against you defaulting on your payments. So it's an insurance plan for the lender,
Okay.
not for you. It doesn't protect you, it protects them. So if you stop making your payments, they have an insurance policy to cover them.
Okay. And then that's kind of, there's different, now I could be completely wrong because I don't really understand all this, is outside my world, but there's different ways that happens. Like if you have there's like a couple different types of mortgages, like a VA mortgage or FMH or whatever that is. I'm not too sure what it's called, but you know what I mean?
So there's, FHA, conventional, VA, and rural development are the main. There's also a bunch of non-qualified mortgages, non-QM loans that have their own thing, but those four are the main types. And with like rural development and FHA, they've got mortgage insurance at a certain percentage.
Okay.
0.85 for FHA and 0.35 for rural development. And then conventional can change depending on your credit score and things like that. Conventional is the one that will drop off if you have 20% down.
Oh, okay.
Right. So once you get to 80% of your loan to value,
yeah,
you can drop that PMI payment.
Okay. And now is that something they do automatically, or you got to call them up?
They'll drop it automatically, usually at 78%. But you can call. You have an amortization schedule, a schedule of all your payments, and they'll tell you the day that they think that it will drop, right?
Yeah.
Based on your home's current value. But obviously, we know that it's an appreciating asset, so that can change.
Yeah.
Right. But they'll drop off at a certain date that they deemed automatically, or you can call them when you're at 80%. You can get an appraisal, things like that, to get taken off.
Okay. Yeah, I've heard about that before, but I never actually understood how that works. But that's cool. So kind of like one of the ways, so when I'm signing somebody for homeowner insurance, I always ask for a mortgagee clause. Can you kind of explain what that really is, and like if a client already has a mortgage or whatever, how would they get access to something like that?
So typically your mortgagee clause is going to be on your declarations page of your insurance binder, right? And what that clause is it's an agreement that if something happens to the property, this insurance agent or agency will pay the mortgage. We'll pay the repairs. We'll do what they are contracted to do. And it's a protection.
Okay. All right. So so let's just say we're not doing a new mortgage. So like, how does like a refinance actually work? Like, does it really change a lot? Like, so I mean, are you kind of resetting everything? So how does like?
Yeah. So I mean, there's different reasons to refinance, right? There's rate and term, and then so literally the only thing that we're changing is either your interest rate or the term of your loan. So if you're going from a 30-year to a 15, or you're going from a 5% down to a 4% interest rate, that's a rate and term. And there's cash out. You want to take the equity that you've built in your home, and you want to get a check for that to pay off high, interest credit card debt or do repairs on your home, things like that. It's a pretty simple process to go through. We determine the value of your home again, so we do an appraisal, or sometimes we can get an appraisal waiver. We put in a figure that we think your home is worth, and if market data suggests that it's worth that, then they'll accept that amount. So we figure out how much equity you have, and then if we're doing a cash out, we determine what we need to take out of that equity up to 80% of what the home's worth. And then we can give that to you to pay off your bills.
Okay.
Rate and term, obviously, we can go up to about 95 to 97% loan to value, and so we can wrap in the closing costs and things like that, so you don't have to bring a check to closing. But
that makes sense.
We make sure that there's a net tangible benefit for those, though, right? So we need to make sure that when we're analyzing this, that it's a benefit to do it. We don't do loans just to do them, right? Like there are people out there that would, but we don't do loans just to do them. We need to make sure that what we're doing is going to be a benefit to your life. Otherwise, what's the point? You're just wasting money. So.
Okay. No, I mean, that makes complete sense. I mean, I guess so. If a client came to you, obviously, if they're looking to buy a house, obviously they need a mortgage. But like, for example, like, hey, I was thinking about refinancing my house. I mean, the rates are a little bit high right now. At least that's what everybody keeps hearing. So what kind of advice would you kind of give them without really knowing too much in details? Like, so, like, hey, I want to refi. Like,
right. So everyone's unique, right? And that's why we go through a detailed application process to see what they need. A lot of times people don't know exactly what they need. So we go through and we see, let's say you have 10 credit cards that are at 19% interest rate. You're making $1,000 a month in payments.
Jeez. Yeah.
Let's say your current mortgage is at 3.5%, which is fantastic, but you're paying 19% on all this other cash. So let's say we raise your mortgage payment by $300 by doing a refinance, taking cash out. You might have a higher interest rate, but we wipe out all that debt. So we want to make sure the net tangible benefit is there, right? So we want to make sure that the amount that you're paying extra on your mortgage now isn't as much as the savings from what we're paying off.
That makes sense.
Right? Right now, I mean, unless you have, a 7% interest rate, it doesn't really make sense to do a rate and term, right? We want to make sure that we're lowering your payments. We're lowering your term. I mean, if you want to lower your term, that's great. But if you're at a 30-year at 3% and my 15 years at 4.5%, it makes more sense to just pay more against your mortgage, right?
That makes sense.
So everybody's unique. Everybody's different. We want to make sure that the plan that we have in place is as unique and different for each person.
Yeah. No, I get you there. No, that makes complete sense. In all honesty, I mean, I guess you kind of brought up some points that I never really thought about. So, I mean, really, it's kind of just like a lot of people say about leveraging your debt. You know what I mean? You're kind of just like, okay, you're transferring your debt from one place to another place. Yes, does it make sense to pay a little bit more on your interest rate, for right now on your home insurance, just to kind of kill everything else? I mean, in that example, I think, it makes perfect sense. You know what I mean? Like,
right. For a lot of people, it's really hard to get out from underneath, like credit card debt. It's really, really hard. So taking an appreciating asset and taking the equity from that asset and crushing your depreciating funds here is typically a good idea. Obviously, we want to make sure that they're in a good spot, so we have to, really crunch down and do the numbers, but that's typically a reason that we'd see right now while rates are still high.
Yeah.
Because rates are cyclical. They're going to come back down. They might never be in the twos again like they were, but I mean they follow an ebb and flow as well. So.
No, that makes sense. No. So I guess kind of what it comes down to is like, so, what would you say, like, I mean, because I know you got like, your different banks that have mortgages, your Huntington, all this, like you got your big box ones. I mean, when somebody's shopped around for a mortgage or refinance, what kind of advice would you give them? Because they're not all the same, correct?
No. No. I mean, first off, if you're going to be looking for a mortgage, contact a mortgage broker. Big banks, even credit unions, and some of these large, we call them wholesale lenders, like, right? They have a wholesale side and a retail side. If you find your local mortgage broker, they're going to be probably the best asset for you in that process. We have access to shop your deals. We don't only offer, like a bank, Chase, they offer Chase rates. They offer what they offer. We can shop your loan to 20, 30 different places to find the best fit for your loan. Right?
Okay.
So that's the biggest benefit of going with a broker.
Okay. All right. So I guess what kind of wrap things up here, what kind of advice would you say to somebody who was thinking about like a new mortgage or something, like, when they're shopping around, like what to look for in a mortgage broker? You know what I mean? So,
I mean, it's 100% a relationship, right? So if you don't vibe with somebody, if you don't trust somebody, if you don't like somebody, you're not going to want to do business with them in the future, right? It's going to make it a terrible process. So find someone that fits who you are as a person. I mean, call them up, have a conversation, have a list of questions ready. Who do you do business with? As far as lenders, how long have you been doing this? What do you offer? Where are you located? Things like that, so that you can get a feel for the person that you're talking to. That's the biggest thing. You need to be able to trust the person that you're with.
No, I totally agree.
That's my biggest takeaway here. Is find someone that you trust, give them a call, come into their office, whatever you need to do, but definitely vet the person that you're talking to.
Awesome, man. Well, hey, I really appreciate you coming in and chatting with us a little bit there, Brian.
Appreciate you having me.
If you guys have any questions, we'll put some contact information, for you.
Awesome.
So if somebody has some questions, they can kind of reach out. But yeah, thanks a lot, man.
Fantastic. Appreciate you.
Yeah.
Thanks.